what I'd like to do is really just kind of talk from a standpoint of buy here, pay here, what buy here, pay here is. And in the car business, we all have different ideas of what things mean to us. And I remember not long ago, Jason Reaves, our boss these days, we were at a class in South Georgia, and he asked one of the dealers that was talking to him. He said, "Do you do here, pay here?" And he said, "Well, that's all I do." And he said, "So how long do you finance your cars for?" He says, "I don't do any financing." He said, "Well, I thought you did buy here, pay here." He says, "I'll do." He says, "The customer buys a car here and he pays for it here. That's buy here, pay here, isn't it?" And of course, it's it's not always what we perceive it to be. It's what other people perceive things to be. So when I talk about buy here, pay here, I talk about what I'm meaning is the customer comes typically to your car lot. He buys a car from you, and he doesn't have all of the money to pay for it now. He has just a portion of the money. So he has what we call a down payment. He pays the down payment. We finance the balance and put it on terms and add an appropriate amount of interest that we agree to, and we sign all the paperwork to solidify the deal, and he leaves with the vehicle. And in a nutshell, that's what I think most people think of as buy here, pay here. Typically, and I don't know if it's possible for you guys, if you don't mind, stick your state in under the chat window, so I know what states are represented. I can certainly see there's Georgia. Thanks, William. And if you don't mind, if you have that ability, to stick that in, and then that way I'll have an idea. Hey, Taylor in Alabama, Tennessee, Florida, North Carolina, Georgia, Indiana. Fantastic. So the laws are I'll try and talk in a broad sense. If you have any specific questions, feel free to email them to us later on, or raise your hand and ask away, and we'll try and handle them. If it's kind of state specific, we may have to get back with you on specific things later on. But there's in most states, in order to do buy here, pay here, the state rules and regulations allow you to operate a buy here, pay here dealership, generally using what they call the state's Sales and Finance Act, or Motor Vehicle Retail Installment Sales Act, and those are the states that are the state rules that give you the rules and regulations that govern things like when you can charge a late fee and what late fee you can charge. So whatever you do in our software, we have, under the company's settings, we have a place to put the amount of the late fee and when you can charge it and how much you can charge. And so don't mess with that unless you know that you're doing so quickly. Some states, like see and notice there, really don't have any usury laws, and the late fee that you can charge, whatever you and your customer agree to. And so you got to be mindful if you are selling on a border across another state. Even though the state law goes by where the contract was initially written, there's still a potential that a customer may think that you're charging something that's inappropriate. So I would always kind of, if you've got states around you that are doing one thing, maybe make sure that you're not charging late fees beyond a limit that may be set by somebody close by. Generally speaking, there's a 10-day grace period, and the amount of the late charge is generally speaking around 5%. Some states, it's as low as 2%. I think that's the case in Indiana. So in Indiana, fly by there. Or maybe it was Pennsylvania. Anyway, just check the rules before you implement late fees for buy here contracts. Now, the rules also will state what the maximum interest rate is that you can charge, or the maximum finance charge, or how you calculate it. The contracts that you generate will be either a pre-computed contract or a simple interest contract. And so a lot of people are unaware of the differences between the two contracts. And I think it's fair to say that the pre-computed contract is probably been around the longest. There's the least number of pre-computed contracts available from an actual written standpoint. The software that we have here has built into it the bankers systems contracts. Now, interestingly enough, Reynolds and Reynolds now own the bankers systems trademarked contracts, and also have the Reynolds and Reynolds law contracts. The law contracts only come in a simplest flavor. So if some of you have been doing bank financing and are looking to do the buy here, pay here, then you may be used to using or seeing those law contracts to a great degree, and that may or may not be the same contract you use for may not be the same contract you use for buy here, pay here. Now, pre-computed contracts, a pre-computed contract, we have them in the system. They are banker systems trademarked. And the pre-computed contract, the easy way to think about this, whenever you create a amount financed, for example, you sell a car for 10,000, you get 1,000 down, and you finance 9,000. And we'll look at that here in just a second under the sale of a buy here, pay here vehicle. When you do that, you're going to get an amount financed, and you apply the interest rate to that, and you get a finance charge. So the pre-computed dollar amount, well, let's do one. Let's look at, let's see if I've got a pending sale in here for a pre-computed deal. Here's one here with, looks like John Wayne buying a vehicle. Let's see if that will pull up. Aha. So I've got a vehicle that has since been sold, but that's okay. And I've got a sales price. I'm going to change that to $10,000 here. And this just happens to be a Georgia deal, but it really doesn't matter that much at the moment. I'll take out my fees there, and I'll put $1,000 down. I've got a title ad valorem tax of $22.75. I'm just going to call it a non-TVT deal. We'll come back to TVT maybe in a little bit. I'm going to take out my other charge down here right now. That would be my one of my other fees maybe that I've got. Yeah, I can take it out in a minute. Now, let me, we'll come back to that, but we've got making a non-sales taxable deal. So what I want to show is I've got $9,017 being financed here, and the interest rate I've chosen is 28% APR. And so the finance charge in this particular case, based on $350 a month, is $49.30. And it doesn't matter whether I do a pre-computed contract or I do a simple interest contract. The ingoing finance charge calculations are essentially going to be the same. I need to put another $17 fee back in there to make up for the one that vanished. So I'm financing $9,017 again. And so what's happening is the ingoing calculations are identical on a pre-computed deal and a simple interest deal. The simple interest deal is typically collected differently. When the way that the program calculates a simple interest deal is when your customer comes to make a payment, we take the amount that was financed, the $9,017, we calculate the number of days to the date that he's making a payment and apply the interest to that to determine how much interest he is due, and we subtract the interest from the payment amount. In this case, the payment amount is $350. And so when we take that $350, subtract the interest, that gives us the amount to the principal, and we reduce the $9,017 from that. That's the simple interest way of doing it. Now, of course, depending on when the customer makes his payments, whether he pays early or whether he pays late, that will determine how much interest you've earned, and that will then determine how much principal you get, or the customer gets, to apply towards the principal balance. And so if he's paying late every time, eventually he could get to the end of the contract and still owe more money. That's different from a pre-computed deal. If I go back to my pre-computed deal, what happens with the pre-computed deal, the dollar amount going in is essentially the same. Everything's the same. But what we do is we take that $350 when he makes a payment. We don't care what date he makes the payment, and we subtract it from the total of payments. So the $9,017 plus the $49.30. Then so we are subtracting every time he makes a payment. We subtract it from $13,947. Now that's really, in a nutshell, the difference between the pre-computed and the simple interest contract. And there's not one that's really better than the other. There may be finance companies that will prefer to buy simple interest contracts over pre-computed, but that would be something between you and the finance companies you're working with. A lot of banks are really using simple interest these days. And so generally speaking, if you do any outside financing or bank financing, usually, not always, usually it's simple interest contracts that the banks want. But pre-computed is certainly perhaps the easiest to explain to the customer when he's made all of his monthly payments, in this case, 39 payments of 350 and one odd payment at the end. When he's done that, his contract is complete. Now, I don't know if there's any questions on the different contracts. How do you know which contract you're using? If you're doing BP deals, you're doing pre-computed. If you're doing BS deals, you're doing simple interest. The program will allow you to do both, or either, and it knows to track the account individually. So it's not like you can't chop and change if you need to or want to down the road change for whatever reason. The other thing that is good to know, I think, from either the pre-computed or the simple interest standpoint, when you're collecting those payments, it will track them properly either way, and the contract that will print should be the contract that matches the type that you've chosen. So if we choose a buy here, pay here pre-computed deal, when we go to print the contract, the program should populate with a pre-computed contract, where if you choose simple interest, it'll populate with a simple interest contract. But it's always worth verifying that. You can force the program to do it incorrectly if you're not careful. So just make sure that you're using the correct contract with the correct system that you're collecting correctly. Otherwise, I've seen in the past, not necessarily dealers that use our software, but dealers coming to us from other software products, I've seen where they are tracking the payments one way, but the contract was actually written in a different way. So you're tracking the payments differently from how you were originally obligated to do so. Any questions on setting up a buy here, pay here deal? I'm looking back up there just to see if there's any other.
I don't see any.
No, don't see any. Okay, that's good. Must be clear so far. Excellent. It's worth noting that if you're a Georgia dealer, by the way, and you're doing buy here, pay here, the buy here, pay here dealers in Georgia, just like in Florida, are required, or pretty well required, to be using the electronic lien on title system. I think that's the case in North Carolina and South Carolina, that buy here, pay here dealers with a certain number of accounts need to be on the electronic lien on title system. What that means is when you transfer the title into the customer's name, they don't actually mail the title back anymore. What they do is they hold it in an electronic vault in the sky. And when they do that, there's an account that you can log into. And I think a lot of folks use Title Tech. I'm familiar with those guys more than I am some of the other providers. But if you're using a provider, you log into your account and you can see the titles you have, and you can release liens there. You can request paper titles, that kind of thing. It's always worth verifying, once you've transferred a title into a customer's name that you're financing, that the title does make its way into that electronic system, so you do have an electronic lien. It's worth looking at the date of the lien, the date of the title. One of the things that a lot of folks miss, most states give the dealer 30 days to transfer the title into the customer's name. And I have seen on occasion that and I like to try to teach or suggest that it may be better, if you're doing buy here, pay here, or even bank financing, to transfer the title into the customer's name within 20 days. In most states, I think you'll find that the lien date is going to be the same as the date of the sale if the title is transferred into the customer's name within 20 days of the sale. I think if you transfer it beyond that date, even though the state may give you 30 days to transfer a title, you transfer it on day 25, for example, the date of the lien is the date that the Department of Revenue or DMV actually get it. And so one of the problems there is that there's a potential for a vehicle maybe to be included in the bankruptcy claim, and maybe you would be held as an unsecured creditor if the lien date didn't match the date of the contract. That's been an issue in the past. Kevin Scott says, if a dealer wants to choose one type of buy here, pay here deal, the other can be disabled so that employees don't choose the wrong one. That's exactly correct. Thanks for that, Kevin. That's a great point. I'm just going to go ahead and cancel that deal there. I'm going to click on the utilities menu and just show you where that is. So under the company setup for your buy here, pay here deals, what we can do is under the finance tab where you can choose the different deal types, what you can do is you can come in here and edit the deal type. And if you only wanted to use simple interest contracts, then you can disable the pre-computed contract. It would no longer be available to be selected. So that's a great tip. I appreciate that. I'm going to put it back in there just in case I need it again. Any questions so far? Oh, buy here, pay here in Georgia, Stephen, you can choose whichever buy here, pay here contract you want to deploy. So if you want to use the pre-computed contract, then that's great. You can do that. If you want to use simple interest, you can do that. If you want to take a look at both of those contracts later on, you can do that. You can print one buy here, pay here deal. Then you can go back, change the type of deal, print it as a simple interest, and you can look at the two different contracts, read through the contracts. I always recommend reading the buy here, pay here contracts, and really indeed all of your paperwork before using it. So, you know, I get a lot of questions from dealers about things like, Bob, can I repo the car if the customer cancels his insurance? And, you know, obviously we don't give legal advice. That's a good question for your attorney, but the easy answer is no, you would not do that if your contract doesn't allow for it. If your contract allows for it specifically, then you could. And generally speaking, what contracts will allow is for the dealer to protect themselves. And so, for example, if you have a contract that you've got and you've got a buy here, pay here deal with your customer, and the customer cancels insurance, and you can't find the car to repossess it, you want to be able to protect yourself. So the contracts, generally speaking, allow for you to put what we call force-placed insurance on the contract, and that allows you to protect yourself and charge the insurance. So that may be something to consider rather than running out and picking up a car when you get a cancellation notice. I always feel like if I'm sitting here, you know, time's now for a lot of people, and they're watching TV at night and they see a show that says, hey, if you switch to our insurance company, you're going to save X number of dollars. And so they call up that company, they switch, they cancel the notice, you get a notice of cancellation, not knowing they've already got it. And the unsuspecting car dealer might run out and repossess a vehicle that's actually insured. And you know, now you have a repossession lawsuit. So just be very careful with that. How do you add that to the contact? How do you add what to the contact, Taylor? How do you add that to the contract? Now, I'm not sure what you're adding. How do you add that I'm going to repossess the car if you cancel your insurance? You would typically. What you would really want to do is you would want to buy insurance. The contract already allows for you to, if the contract you're using does, the contracts are not likely to be changed because so many people are using them the way they are, and they're not produced by us, they're produced by banker systems or Reynolds these days. The buy here, pay here contracts, generally speaking, are the same as contracts used by finance companies, and they're going to say, if you cancel your insurance, we're going to buy insurance and put it on there and charge you for that insurance. So that's already on there. Yeah, Taylor, I don't know exactly which contract you're using, but if you'll contact me after the class or shoot me an email to bob@winereaves.com, then we can talk about which contract you're using. There's a couple available in the system. Let's go ahead and talk a little bit about maybe how in today's climate can you do buy here, pay. I think buy here, pay here is always strong. I remember Wayne used to always tell us that the buy here, pay here business is perhaps one of the only or the very few businesses that are truly recession proof. And whilst we're maybe not in a typical recession, it really is a recession of sorts. And buy here, pay here is certainly strong. Car dealers have the ability to finance what they sell, as long as, for example, in the states where you're required, you've got the appropriate licensing to do it. I know in Florida, you've got to have a motor vehicle retail installment seller's license to be able to do buy here, pay here, or bank financing. In Georgia, you don't need a specific license, and that's true in the Carolinas and Tennessee as well. You can finance what you sell. Now, what happens, I think, the climate today is such that people maybe are not going to have great credit when they come out of this, and maybe in a situation where they're looking for buy here, pay here business, or maybe they've had a car that's been repossessed by a bank or finance company several months now, and they end up becoming a buy here, pay here customer. There's no telling where this will end in financial repercussions for people. They may be able to hang on for several months and then fall by the wayside. So buy here, pay here is certainly going to be strong in the future. And so there may be some of you that are doing buy here, pay here. Maybe some are going to get more here, pay here business than you really want or need. It's worth knowing that there are companies out there that provide lines of credit. And when you use our software, because if you're using the screen that I've got, the what I call the online version, the online version gives finance companies an ability to tie in the back end of it with your permission and run reports. Companies like, for example, Primaland, Spartan Financial, American Credit Acceptance is owned by Spartan. There's other banks, Texas Capital. There's different companies that will provide lines of credit. I know Car Financial are out there. Car Financial are still buying receivables, they'll even collect for you if you want to collect right now. If you have, having things you can have set up with to maybe collect your payments for you. There's fees involved in that, but that's available. So just be mindful that there are capital opportunities out there. They're a lot more plentiful when you have an online-based program as well. So that's good news. We work with a lot of those companies to provide specific reports in the program under reports and export data. This is where a lot of those companies will get their reports from. Some use the no predefined report, and others will use reports written specifically for them. So there are some reports that they know what's in here, payment deferred analysis reports, that kind of thing. We'll talk about that maybe in just a little bit. But there's a lot of information available to banks that you may do business with down the road. The question from Vipul is trying to print a temp tag on temp tag, but it cannot process the deal because of a shutdown. What in that case? Just give the contact customer and get a test tag to customer. Now that's a kind of a question for outside the scope of this class, but the only way to conduct a test drive is with your dealer here in Georgia. So you would put the dealer tag in, you would need to go with the customer to make it legal. So that's the way that you do that. I'm not sure why you can't print a temp tag. That's a question for the temporary operating permit folks at GIDA. I know they're open. You should certainly be able to print it from the temp tag site that you're using. So give them a call, or give us a call after the seminar here. Now, how do we sales? If you're advertising on your website, and we've seen a couple of modify their websites so that on their homepage they'll have instructions for how they want to conduct. Maybe on the About Us page, maybe they've got Meet the Staff pages, and I would all recommend, if you can, on your website, if you have a website with Wayne Reaves, this will make it easy. You can go in there and you can add the different pictures of the people that work for you, so that when somebody comes to your lot, perhaps, and they should be doing, and I think in almost every case, probably would be smart to do your dealership by appointment only. So the the customer can contact you through your website. You can explain on the homepage how to do it. Call you on your cell phone, a office phone, have it directed to your phone so you get the call. Maybe negotiate the deal with them. I always like to think of when you're talking to your clients or your customers, when as much information as you get them up front before they come to the car lot, get them on your website, walk them through filling out the credit application, drop that down into the prospect manager within the software. So we have, let me go ahead and get my shortcut window up. We have the prospect manager. One of the things you can do if you have the Reaves website, you can click on get the prospects from the website right here in the middle, and what that will do will reach out to your website and bring in all the contacts and credit applications, and from there you can go ahead and convert these to a pending sale. You can run credit bureau checks before they get there. You've got an IP address stored with the date and time from the customer. Maybe have that same customer with his information on credit app, maybe send you a quick text message with a picture of his driving license ID. You can check his license before he shows up at your dealership to go ahead and verify. I know in both Florida and Georgia, we have a little bit of an advantage there. We can do a driving license check. When you do the driving license check, it will let you know the driving license is still valid. That's great because the insurance that you have for your lot may or may not handle test drive you want to handle it. And if you've got a customer who has an invalid driving license, almost certainly you driving the vehicle to demonstrate it, not letting them drive it. Almost certainly the insurance company is probably not going to cover that car if there's a. It's always nice to reevaluate your insurance at this in a situation like this, because your customer that shows up wants to test drive the vehicle, and maybe you want the customer to go by themselves so that they're not endangering a salesperson, or salesperson's not endangering them, maybe carrying the virus and not even know it. So in a case like that, in Georgia, it's difficult to conduct a test drive because you can't put a temp tag on there for a test drive, and you can't put a dealer tag on there if you don't have an employee or officer of the corporation in there. So how you do that is really a bit of a mystery, and is almost certainly going to be a little bit illegal. But you send the customer on a test drive, and if you normally conduct test drives with an employer, and all of a sudden you're sending people by themselves, make sure the company knows, because changing the way you do business, and it may be a change in your rates or what they cover. Anything you should do differently during the COVID-19 pandemic? So many laid off until further that the evictions have been paused for now, so our repos paused as well. That's a great question. Repossessions have not been paused. There's no requirement currently that I know of to not repo a car, but that could change tomorrow or tonight at 6 o'clock on the 6 o'clock news. So you've got to be vigilant of what's going on, and you've got to consider what are the best case practices for you and for your customers. And is your customer really in a case of hardship, or are they really in a situation where they are taking advantage of something? And it's maybe difficult to determine that. One thing that you've probably got to be careful of is however you treat one customer, you should probably treat them all. That's always standard. If you start to take late payments, and you don't normally, and you allow the customers to make late payments to you, as soon as all this stuff is over, you may want to send a notice out to all your customers saying, by the way, we did take late payments, we're no longer going to do that, because otherwise you've now set a precedent of accepting late payments from people, and that sometimes is an issue. So that's a great question. There's ways that you can maybe help people by deferring payments. So in our system, you can defer payments a couple of different ways, really. You can refinance the entire contract to a more suitable payment schedule for the customer, so you can refinance. You can forgive a payment and just slide the payment schedule back a payment or two payments. You can slide them back if that's what you want to do. If the customer is in a bind and you want to credit their account, you could certainly credit the customer's account That's not the same as forgiving a payment, but it's better because it actually allocates, it reduces the balance, whereas deferring a payment just doesn't. How do you forgive a payment? It's a great question. So, and any of the stuff I mentioned that I go over fast and I don't show you exactly how to do it, you can always call back in later on and ask us. So here's Dylan Hughes. His next payment is due on May the 1st, and he tells us he's not going to be able to make it. So what I can do is I can go in here, and if I go in and I take a zero payment, so I'm going to take a zero payment, what I can do is I can come around and I can change the next due date to whatever I want it to be. So I've not changed his balance or anything like that. All I've done is posted a zero payment and changed the next due date. Now, you may not have the permission set to allow you to do that. So under the utilities menu, let me exit from there just now. If I change, if I go to the utilities, set up company information, some of you may try to do that and it doesn't work. Under the account receivables default, you'll see the very top selection here is allow the editing of the next due date when taking a payment. So the customer may come in and make a payment and say, hey, I'm going to miss next month. You can slide the next due date back a month. So you can do that by posting a zero payment, or when they're actually making a payment, you can slide it back then. So that's one way to, now we're not forgiving the payment, VD, so that's important to mention there. All we are doing is we are moving it backwards. Does that make sense? If we were going to forgive a payment, truly forgive a payment, I would give the customer credit for his account, and that credit would be would come under credit the customer, and here I can credit them however much I want to credit them, and that's something that would be a generous act on your behalf, but certainly not something that's required or forced. I know there are some states where they've talked about you can't repossess cars, you can't, you just got to be mindful that how does it look on your reputation if the customer genuinely has a hardship, or maybe they can't come in and pay you because who knows, they're strapped to a hospital bed with a ventilator on or something like that. So you got to just be a little vigilant as to what's going on. Any other questions there on that? So the customer can fill out a credit application online. You can drop it down, move it across into the pending sales status. You can then negotiate with the customer, maybe put the numbers in to figure out. And remember, when you're figuring a deal, let's go in here and we'll choose a vehicle. I'll choose a 2006 Dodge Durango. It's got 98,000 miles. I can change that if the miles has gone up. In Georgia, we've grabbed the value of the vehicle, and we can put in the customer's information. Of course, if I'm going to be doing a credit check on the customer, I'll want their social security number. Lets me know it was issued in Illinois, so I know the customer was potentially the social security card was issued there. We'll sell a vehicle to my friend, Kevin Scott. We'll make you nice and young, Kevin. One New Street. And if you do driving license check, you can do that in Georgia, and it will tell you.
I'm just a tad younger than that, Bob.
Just a tad younger, you're right. So what it does, if you haven't used a license check before, and this works in the same way in Georgia, what it actually does is it will pull up, if you can see that, it will copy the driving license to your clipboard and allow you to paste it in. In this case, all it tells you is it's valid. So worth checking. Insurance information, you can plug that in. Telephone numbers now. Something that I was going to mention is I'll put my cell phone number in there. That's actually mine and not Kevin's. So if you want to call it, you're more than welcome. The email address, this is mine. Make a note of that as well. And the program has the ability to email and text. So having set up a buy here, pay here customer, the buy here, pay here customer could, perhaps should, be able to make payments to you online. We've got a few partners that help with online processing of payments. One of our more recent ones and a more complete integration is CarPay, C-A-R-P-A-Y. CarPay is a company that can provide several features to your customer. In fact, they can provide text messages to your customer to let them know when payments are coming due, the ability to pay by text, pay by phone. So they can send reminders to the customer. They can also provide a mobile app, so the customer on their smartphone can have a mobile app where they can make payments. They can also go to your website, if you have a Reaves website, and go to the CarPay widget on there and make a payment through the CarPay widget. They can also call you, and you can use a virtual terminal in your office. So there's ways for the customer to make payments without actually coming to see you, and that's advantageous really anytime. I mean, there's more people starting to use that now that always used to like the customers coming to their lot so they can see the vehicle and so forth. I think as more and more people get used to the fact that customers are going to make payments to them online without having to get in their car and drive all the way down there, then that will probably become more and more the norm as time goes by. So the program will take a payment from CarPay and can auto post it right into the system. And I know some of you guys are using that. I noticed a couple of names in there. I won't mention them, but I noticed a couple that use the CarPay system. I know that others of you use some of our other payment processors that have been around for longer as well and have batch systems set up and recurring payments and all that. So all that's good and well, and a good use of the customers not having to come back to see you. We mentioned insurance, filling in insurance information for the customer. You can require full coverage, but just be careful of how you handle that. The map here will draw a map to their house, so you can get an idea of where they live, even perhaps before they come and see you. So maybe you can make sure you know where it is. You can ask them how to get directions there. That will help you with some of the red flag requirements to make sure that they're not in the process of stealing somebody's identity and buying a car from you when they're not who they say they are. And so, you want to be looking at the credit bureaus and maybe asking them some questions that only they would know about the credit that you see on a credit bureau. So if they can't answer it, you probably know it's not them you're dealing with. So mindful of the red flag laws that are still there, mindful of privacy laws as well. Be careful what you do with anything that you receive over your smartphones, anything you receive via email. You got to be careful because a lot of that stuff can hang out there. So it's nice to use the credit app, have it loaded directly into the software, and then print the deal paperwork out and have it ready for when they come to do business. So doing business remotely is probably a little bit of mindfulness, and I'm sure as many of you out there already found some neat ways of conducting business at a 6 foot distance or farther, so that you find it easy. You find it still possible to do sales and collect payments where you can. Credit application, you can fill in more information here. You can add addresses. There's a green add down in the bottom left. You can add employment records, personal records, credit references. All of this stuff is good for later on when you want to sell the accounts. If you maybe do a lot of business and want to sell the accounts to generate money to put back in your business. And so the more information you've got, perhaps the better. It's always nice to have people to call when you're looking for the customer. So we've got the customer's information, credit app information. We can come to the sale information, and here we've got a simple interest deal, and we'll sell this car for $8,000. I've got an $18 title fee in Georgia, no tag fee. And remember, don't charge a tag fee unless you're picking up the tag for the customer and charging them for the tag. We're going to get $1,000 down on this deal. And I've got an annual percentage rate of 28%. Now, one of the things that we've added in the program, and we've added it recently for the great state of Florida for our friends from TaxMax Tax Refund Services, one of the things that is available, which perhaps not important right now, but it may be down the road, and it may be valuable right now because there's potentially stimulus checks coming. I don't know how long they'll take to get to your customers, but just like tax refund time, there's a lot of dealers that want to take advantage of a buy here, pay here deal. What happens is you've got a customer that's going to pay you $1,000 down. You'd really like more money than that, but they don't have it right now. But they're willing to bring you a piece of their tax check back. So you might be charging 28% interest. That's pretty close to most state maximums. And it keeps you below maybe the max on most deals. But what you've got is you've got an ability to set a payment structure by the payment amount. I'm going to change this one to $400 a month. Just so happens that about $100 a week is about the average payment these days for buy here, pay here deal. Give you an idea. So $400 a month is not unheard of. The customer might say, well, I can't pay $400 a month. And you say, well, can you pay me $100 a week? And they say, well, yeah, I could pay you $100 a week. Why didn't you tell me that I could do that? So, so it's the same thing basically, or is it? There's a special finance button here that allows you to do some different comparisons. And believe it or not, $100 a week is the same as $433 a month. So it's actually a little more. And you would just choose the one you want. Now, when you use the payment amount, it gives you this little red box. And what this red box will allow you to do, and this is kind of neat, it allows you to schedule what we call an irregular payment on a payment date in the future. So the customer comes today, they've only got $1,000, but you know that they've got $2,000, $3,000 more coming to their family in the coming weeks, and you say, listen, I can save you some interest if you'll bring some more money back to me in a month or two. So if they're able to, and we could set this up as a tax payment, but I'm just going to go ahead and set it up. So let's say July the 1st, they're going to bring you an additional $2,000. What I want to do is I want to draw your attention over to the finance charge over on the right-hand side, $21.63 just now. When I save this $2,000 extra payment in a couple of months, it's going to lower the interest to $1,200. So if they actually pay you that $2,000 in a few months, the customer is going to benefit to the tune of $800. And you're going to benefit to the tune of $2,000 extra cash flow a lot sooner than you would have otherwise got it. Now, if the customer does not pay it, we don't recommend that you go after the car. We recommend that you continue the contract because it's a simple interest deal. Remember the difference between simple interest and pre-computed. This feature is only available on simple interest because it's going to continue to accrue the interest, and the customer will go ahead. And if we don't do that, the customer is going to end up paying you the extra interest over the length of the contract anyway. So you'll still get the money, you'll just get the extra interest. Kevin also mentioned to me that I should mention that if you do move a payment to the end, the interest is still being accrued, and that is true. So if you do defer a payment, the interest is still being accrued on that payment as you send payments back for the customer, which means the customer is actually going to pay a little bit more long term. So it may be worth encouraging the customers, hey, look, we can do this, but it may cost you a little more in the long term because of the finance charges unless you catch it back up down the road. But sometimes it may be worth trying to educate your customers. I think it may be useful to to educate the customers a little bit about how interest works and how by paying you more money earlier in the contract, they can actually save themselves, quite a bit of money down the road. I mean, I'm sure every single one of them would pay $2,000 on their loan if they knew it was going to take $800 off. Maybe. Having got the deal structured the way I want it, I can come over to print forms. Before I print forms, I'm going to click on my deal recap. For those of you that are not familiar with this screen, this vehicle's got an unusually low cost, so the profit's not looking right. But let's just say that I had $4,000 in the car. It would show me the profit at the top here would be correct. If I have a dealer fee, we'll talk about that in a minute. It would show the dealer fee as all profit. It's really nothing more than sales price on a vehicle. That's true, and I think every state recognizes that the dealer fee is just additional sales price of the car, and it's taxed, I think, in almost every state that I'm aware of, maybe with the exception in one of the Carolinas. If Squeaky gets on board, she may tell us which state it's not taxable in. I see Squeaky there. Squeaky, I've given you the ability to talk. If you unmute your mic, you're more than welcome to pipe in or shoot me a message on the chat there. So on this particular screen, hey Squeaky, can you hear us?
Ask me that question one more time, Bob. I was awake.
So the question, well, it really wasn't a question. It was just myself talking out loud. I was mentioning if they have a dealer fee, it's typically going to be zero cost to the dealer. It's all going to be a profit. And in almost every state that I'm aware of, the dealer fee becomes a taxable item and is added to the sales price before calculating the tax. And then something reminded me that it was either South Carolina or North Carolina, one of those two states I didn't think did that, but I may be wrong. Can you remember?
I think North Carolina does not.
Which one?
North Carolina does not.
North Carolina does not. So the highway use tax in North Carolina does not apply to the dealer fee.
Correct. The North Carolina 3% highway use tax is applied to the trade difference.
The trade difference. Okay, perfect. Thank you, ma'am.
Welcome.
I appreciate that. Welcome aboard. So the screen on the right-hand side here shows us the profit on the car, the total profit on the deal, which includes the finance charges. But important to the buy here, pay here dealer is the money in the street. In this case, because the cost is abnormally low, the money in the street is also abnormally low, but you could expect to see that in the thousands. And the number of days until you break even, you could expect to see that in, you know, the 180 to 360 days or longer, depending on how much money you're spending on your vehicles. So that's kind of useful to have your sales guys look at. A lot of times dealers, I remember Wayne at his car lot, along with other dealers, he would say, listen, if the deal is not out of the street in a certain number of days, or the dollar amount in the street is above a certain amount, don't do the deal without getting approval first. So that's something that you may consider down the road, looking at how much money you've got at risk in the street. There is a report in the software that shows this information, and in that report is the account receivable report. Under the account receivable reports is the customer summary, and so the customer summary is a fantastic report, and I can run it by my different account types. We'll talk about those in a minute. But over on the right-hand side, it'll show you the realized profit. And if you back up a few lines from that, you'll see the dollar amount in the street and the days in the street, how many days till we break even. And so not only will it show up on the take payment screen if you want it to, it'll also show up here on the customer summary report. So how much money you've got at risk is important. How much money you may make on the deal may be less important than what your risk is going into it. We used to always say that money in the street is like taking that money in $100 bills and put it in a shoebox and put the shoebox in the trunk of the car. And when they leave your lot, they leave with your money. And every week they come back, they open up the trunk, they open up the shoebox, they take $100 back out of it and give it back to you. So that's the way that kind of works. Now, under the forms, we have the ability to go ahead and click the print form here, and it will select all of the pre-computed or simple interest, in this case, forms that we wanted. So I have a simple interest contract right here, and I can view that to the screen. But what I think what I'd rather do is maybe show one that I created earlier. Do you see the deal right here? I don't know if you can see that on the screen.
We can see it, Bob. You might want to enlarge it just a little bit.
Enlarge it. This is a Georgia contract, and really all I wanted to do was for the folks that are using the program, this is a simple interest contract. This is the non-arbitration flavor. The simplest contract comes in either with arbitration or without arbitration. If you use this one, this is the 102 form. The arbitration one says Georgia 103. And generally speaking, the finance companies and banks will typically use the 103 form. It's got the arbitration built in. Generally speaking, buy here, pay here, use the 102 form because you use a separate arbitration agreement that you use for all your deals. So that's something just to think about. But this is, if your contract doesn't look like this one, it looks a little maybe older, has the 3 boxes on the top, then that's a pre-computed contract. And it should be somewhat evident because down at the bottom in the middle, we write either pre-computed or self-interest, make it easy for us. It's actually coded into the banker system code on the forms, but we write down here so that you'll know what it is. You could also learn what it was by looking for if you're paying off early and things like that. Built in this particular form, telephone calling and monitoring, we still recommend the additional cell phone disclosure for buy here, here deals, or even bank finance deals. If you're going to contact a customer later on their cell phone, then you should have a disclosure for that. And we think that that's useful to have because you maybe, even if you don't intend to call them on their cell phone, maybe you end up doing it. So it's worth having a cell phone disclosure. So that's the system. And you see it down here, consent to contact on cell phone. So you've got the bill of sale, the odometer, the contract, the as-is. Remember, the as-is form and the buyer's guides are 2 separate forms. Doesn't matter, cash, finance, bank financing, whatever it is. The buyer's guide is the one that goes in the window, and the as-is form is the one that complies with the Federal Warranty Act's notice for warranty disclosure. Here's a risk-based pricing notice. It's worth mentioning risk pricing because if you're doing buy here and that's all you do, and you charge all your customers essentially exactly the same thing, then you're not engaging in risk-based pricing. You don't really have to worry about a risk-based pricing notice. If, on the other hand, you're determining what interest rate your customer gets based on his credit, now you are engaging in risk-based pricing, and those that get the higher rate should get a risk-based pricing notice. And it says those that get the 40% of those that get the highest interest rate should get a notice from you that basically says, hey, your credit wasn't great. We still financed you, but you paid a higher rate of interest than the majority of our customers enjoy. And so what that allows them to do is to contact the credit bureau, and the credit bureau can then, once the credit bureau can be contacted by the customer for a free copy of their credit bureau report, so the customer can see what their credit actually is and why maybe there was an issue that they ended up paying a little bit more than they should have done. So the risk-based pricing notice is there if you need it. Most dealers actually don't need it if you're charging everybody the same. So just be mindful. If you do bank financing and you're not doing buy here, pay here at all, and you never do buy here, pay here, then, and you're running credit bureau checks on everybody, the credit bureau has what they call an exception notice. You give it to every single person, and it doesn't allow them to get a free copy of the credit bureau, but what it does do for your customer is gives them a copy of the credit bureau score and how it compares with the national averages. So risk-based pricing, something to remember and keep in the back of your mind. Tracking devices, my goodness me, there's a ton of people using tracking devices, and just remember that if you're using a tracking device and you have the ability to disable a vehicle, just remember that in many, many cases, the disabling of a vehicle is considered a repossession. So even though it's sitting in their driveway, you've disabled it, and now they want to drive to the hospital or drive the grocery store or drive and get some medication or drive in whatever their excuse is going to be, what's going to potentially happen is you have effectively repossessed the vehicle in the eyes of many laws. So if you're going to use the disable, just be mindful of the current climate. And even though, you know, if you can repossess a vehicle, then you could go ahead and disable it. But if the law says, hey, you can't repo a car, then theoretically you shouldn't disable it either. So just keep that in mind. Repossession agreement to provide insurance. Those are kind of nice things that the customer can sign that will, you know, give a little bit better closing maybe. When you're closing the deal, hey, it's a repossession agreement. If you don't do like you're agreeing to do right now, then ultimately we can pick up the vehicle and you're agreeing to provide insurance. What allows you the right to repossess a car? A lot of people miss this. Well, I've got a repo agreement. Well, that's all good and well, but you should have the contract has a security interest statement within the Fed box. And when I had that up there a second ago, let me go ahead and launch it again. I'll blow that up. So in the Fed box, you see the security statement right there. You are giving us a security interest in the property purchased. That and a properly recorded security interest on the title, otherwise known as a lien. The security interest on the title plus this is what would, when the customer is in default on the contract, that's what, generally speaking, is going to give you the ability to pick up the car. So just be careful. But then, of course, you know, you've got to be careful today because things are changing so fast. Okay, let's see. Any questions on any of this? I don't see any other questions popping up there. That's good. But I have questions. So if you've got one, type one in. I don't see any hand raisers, but I haven't seen anybody try. Now, so anyway, what we would do is we would complete the deal and save this deal. Also, by the way, you can preview your forms before printing them. A lot of people are not aware of this. So preview forms before printing, and you do that, what you're able to do is you can create that PDF file like I just had. It has all of the PDF documents in that list on a form, on a one document that you can use to print out or email if you wanted to, something like that. So you've got that a bit. I'll just save the deal. Oh, before I save the deal, information. Every now and again, there are finance companies out there that will provide money to do buy here. So they actually let you do buy pay here, use their money. When it comes to mind is Glenview Finance. So for example, what would happen is in a case like that, Glenview might want the primary lien holder. I just call them a big banking trust here. And then your dealership might want to be the, you know, I've got Beta Auto Sales, might want to be the second lien holder. So you can change who you want to be the primary lien holder and who you want to be the second lien holder on the title work. And I'm just going to go ahead and make the car lot holder again. But you can have two liens right away going into a deal, and that's useful for one of these companies that wants to give you money, or you want to use their money to fund the deal. And you do the collections and make sure that they get, you know, the half the collections as they come in or whatever their deal is with you.
Hey, Bob, we have a question in the
Yeah,
question
go ahead.
and answer section.
Say that again.
In the question and answer section.
Oh, I don't see that.
Well, it says, how can I get a customer phone number to print on BOS?
Well, that's a good question. So the customer's phone number, if you put in their phone number, it should transfer over to the bill of sale. So if you plug the phone numbers in, it should show up there on that bill of sale, unless I'm missing something. Let's now, what state was that question from, incidentally?
I'm not sure because he put it in the Q&A section.
Okay.
So, see, Kevin Shabbat If you are listening, what state are you from? Kentucky. We added on system, but it doesn't print. Any thoughts on that, Bob?
Yeah. Shoot me an email, bob@winreaves.com, with your contact info, and we'll look into that, because it should be, see right here, there's that cell phone number that I plugged in. And that's the one that's listed as the primary number on the, it's got the checkbox for the primary contact. So that should show up. The primary number should show up on the bill sale.
Okay.
So make sure it's checked.
So I'm going to add Bob's email to the webinar chat section. So
Yeah.
if you want to write that down.
It's also right there in that
On the top.
bob@winreaves.com. Thanks, Gianna. Okay, Kevin, thank you, sir. Any other questions on this? If you were doing bank financing, of course, we work with Route 1, so you can send your deal to Route 1. You can also send it to Cuddle, Credit Union Direct Lending, Dealertrack, Mid-Atlantic for the point of sale program, and Credit Lane, who also have a couple of finance companies that they work with. So Dealertrack, Route 1, Credit Lane, and Credit Union Direct Lending are all very, very similar. The finance portal. The Credit Union Direct Lending are a little bit fussy about what kind of businesses they do business with. So don't be surprised if you reach out and they're not so interested in doing business with you, but you certainly can try. Start rent up devices. If you're going to put one on the deal, you can put in the device number and it will save it to that deal, so that when you pull up the customer's information and take payment screen, their information will be there. So I'm just going to go ahead and I'm going to book this deal. It's going to ask me how much money am I getting down and how am I receiving the money. Well, the nice thing about that is if I was to receive more than $10,000 in cash over a period of time from the customer, it's going to alert me to the fact that I'm going to need a Form 8300 to fill out and print, and that's in keeping with that IRS law. So we want to be sure that we're tracking the amount of money we're getting and how we're getting it correctly as best we can, so that we can get accurate reporting later on. So Kevin gave me cash. That's fine. I'm going to save that and we're good to go. So he gave me the cash. I've got all the deal paperwork signed in Georgia and Florida and the South Carolina. I've printed a temp tag. In Tennessee, I printed a temp tag through Tennessee Easy Tag. And so the customer's gone with the vehicle, and what the program just did was it created the account receivable for the customer. It took the vehicle out of the active inventory and moved it into my sold inventory file, and it showed the down payment that I received on today's cash sheet. So if I were to look at my report and look at my cash sheet for today, for example. So just for today, for account types 1 through 50 for my car lot, I can view the report and there's my down payment, $1,000. The program can separate and will separate the credit card payments and online payments and things like that for me, so that those money are all in the banks. It's not expecting those to be added on a deposit slip when I make a deposit to the bank. So one of the things to look for when you're using the software is your deposit slip should match your cash sheet on a daily basis. So one of the things there is make sure that you account for the money correctly as best you can, and make sure that all the money makes its way into the bank. If it doesn't, for some reason, then you should write a note on a cash sheet that explains why there's a difference between the two, so that when you look back at it, say, well, why did the bank deposit not match my cash sheet? Here's the answer right here. We took some cash money out to go down to the local pizza store to buy pizza for everybody, or whatever it was. So that's kind of a neat thing. Now, something that may be worth mentioning is some of you are doing buy here, pay here. You collect maybe large cash, or at least used to, before people stopped coming and making payments online. and you go to the bank periodically during the day or on, you know, one time a day in the middle of the afternoon. And the problem is that the date range here shows me everything I collected today. Well, the problem is tomorrow's cash sheet, if I still collect more payments after going to the bank right now, and I collect more payments, this cash sheet is going to have everything on it for you when I run it tomorrow to pick up the extra payments. So the way around that is, and so I want everybody to be aware, is you have the ability to, what we call is print all unclear transactions. And when you do a transaction, it creates a batch, and that batch will be noted not to show up on the next uncleared transaction report. So anytime you run an uncleared transaction report, it kind of stops the clock there and looks backwards for any payment that was received since the last time it was ran, and it will put them on. This way you can go to the bank in the middle of the afternoon and your deposit slips always match. So that's something that you know, sometimes people miss. The other thing that is mentioned in here is the agents. Back in the old days, you know, you would have a bunch of collectors lined up, and they would all have their own cash drawers, and you want to know how much money did Bob collect. So you type in here, you know, Bob through Bob, and it will show you the payments that Bob collected, and so that's kind of nice to be able to view the agents that you want to see the money they collected, so you can match their deposit with their cash draw. That's kind of neat. Also, when we talk about reports, it's worth mentioning that the customers can be divided into different types. So let's say you're doing buy here, pay here, and you're using our friends at Glenview to fund some deals, but maybe not all deals, but some of them. And so there are payments that are going into your bank, and then there's payments that you're collecting that maybe you're depositing into another bank account. So you can divide your customers into what I call different categories, or what may be more easy to visualize, different filing cabinet drawers. So the customers that owe a lot of money are in the top cabinet drawer. We'll call that drawer number 1, and the second drawer below that, we'll just call that drawer number 21, just as a number to pick. And so I'll put my pledged accounts to Glenview in account type 21, which is, you know, like the next down in my filing cabinet maybe. So that way, whenever I run a cash sheet and I want to see what money has been collected, what I can do is I can the account type. So I want to see just what was collected for account type 1 through 1, or between a date range, or I just want to see what was collected through account type 21 through. So then I hear you ask, that's great. How do I get my customer from account type 1 when I'm doing a deal? That's where it automatically goes, where you can change it at the time of doing a deal if you remember. But if you forget, not a problem. Utilities, special utilities. And what we can do is we can change number 1 there is transfer customer to type. You can take account type 1, move into account type 21. So for example, I could take Scott and find that one there, and move him to 21. Probably going to tell me I can't use that. Does not exist. Okay. Enter description, and I'm just going to put here Glenwood since I mentioned their name. And so now you'll see under account that on my list here, he's now in account type 21. Account type 1's my buy here, pay here. Account type 21, buy here or pay here, where I've got them pledged to Glenview. Account type 25 is an outside finance, and so on. I've got a few other finance company repo in there as well. Now, so let's say Kevin comes in and he wants to, oh, look, my internet connection's unstable. Hopefully you can still hear and see me okay. I'm going to take a payment on Kevin Scott. And so we'll run down there. We'll take a payment on this one. I'm going to mark as having printed your privacy notice, Kevin. I'm going to take a payment. He's paying me $100. It's weekly payment. It's going to be cash. No late fees. It's going towards principal because I haven't earned any interest yet. It's a simple interest deal. Next due date, though, is going to be 4/22. So I'm moving the next due date like it should. And I'm going to save and print a receipt. And if I had my email and texting set up, one of the things that it would do now is it would email a receipt to Kevin. So having received his money, I can email him a receipt. I don't have to print him one out. And I can, if I've got his cell phone number and he's allowing text messages from me, I will send him a text message that will say, hey, thanks for your payment. So now he's got 14 days till his next payment, not the 7 that was there before. And so now when I run my cash sheet, and I'm going to look at my cash sheet from account type 21 to 21 because that's where he is. There's my $100 payment. So if this was a report that I was given to Glenview, I can show the money I've collected and it doesn't show the down payment because that went to the car lot. So it makes it easy to keep up with your customers and their accounts. It breaks down all the payments so you know what you got, where they went, and what they were accounted for. So any questions on any of that? I don't see any other questions coming in. That's good. Let's see. I mentioned CarPay. Some of you might be thinking, Bob, that down there at the bottom, mine doesn't look like that. I don't have those buttons. You can click on user buttons and you can add the buttons that you want on the bottom. So if you're always using something, the operation summary is quite nice. This is a neat desk calendar type of thing that will tell you what payments are due. Maybe I want to see what if I want to see what payments were made. I can maybe do that. Let's see here. Car sales. Let's see what car sales we have. So I have one buy here, pay here deal today. I can double click on the box and it will open it up. So it will give me the different information that normally I would write down on the calendar and want to go back and look at. So change the year and date and go back and look at the data. If I wanted to see whose birthday it was today, I might have that on here. And so no birthdays in April. Not even Kevin Scott's birthday. And then over here we have money collected. And so it's going to show me today I collected $1,100 in the car lot. So it gives you a nice tool. Some other tips when you're taking payments. Of course, you have the take payment screen. Let's just pull Kevin back up and look at his payment screen to get some basic information here. Customer information. You can always go in and edit his information. You can see the deal that you did. You can add pictures of Kevin, his vehicle. We can, if we've got a tracking device on here, this is where you can locate the vehicle from, or enable it and disable it if that feature is one you're using. We can sell or view the account to the in-house finance company, and we can report information to the credit bureau. So we've got information that can be reported to the credit bureau. We can set that up. A lot of dealers like to use reporting to the credit bureau. We have a couple of different methods for doing that these days. We can work directly with Equifax. We have a deal where you can use a company called DataLinks or Microbilt, Credit Manager. There's a variety of different ways of doing it. And so if you're interested in that, let us know. But we can report your customer's credit to the credit bureau for you or help you with that. Under the payments tab here, you've got payment histories. You've got payment schedules, calculate net payoff if it's a pre-computed deal. Pre-computed deal because the interest is all added up front. If the customer pays you off early, you've got to then do a calculation to find out how much interest you haven't earned and subtract it. We call that a rebate. Subtract the amount of interest you've not earned from the remaining balance. So there's a rebate of interest that's applied. And then we've got other stuff down here that applies to the credit card settings and things like that. We also have, and this is something that's relatively new, it's a kind of a neat feature, we have what we call managed fees. The managed fees allows you to set up an additional string of payments alongside the customer's regular account. And this is used typically by companies out there that offer things like collateral protection insurance, force-placed insurance for the customer, perhaps some gap insurance or gap policies. And what it allows you to do is add an additional payment with each payment that the customer is making. So when you take a payment, it will break that down for you and add it to the customer's payment. So instead of Kevin paying me $100 a month for his car payment, maybe his payment jumps to $100 for the car payment and $25 collateral protection insurance, whatever the amount is. And so it allows us to go in here and put in whatever the fee is, the description. And so it might be, we work with a number of different companies, Dealer RE, Buckeye, we work with those guys. There's other companies out there. There's Gems in Florida if they're selling an app or anything on the side. So you can, and there's multiple others. I can't remember everybody's name off the top of my head, but you put in whatever the fee is for, and then who the vendor is. You can add and edit vendors on here. Better call that gap. So our friends at PTS Gaps, we'll call it a gap policy, and then you can put in whatever the dollar amount is, that you're charging the customer, and how much are you paying for it, per payment period or something like that. So, and then it would add it to the deal. I'm just going to exit without saving that right now, but it would add it to the payment structure. So when the customer comes to make a payment, that payment automatically gets added to the account. So just remember that's in there if you're ever talking to anybody about that. Now, I'm trying to think if there's something else that I should probably be discussing. Let's see. Got my little handy dandy notes here that I scribbled.
Did you see Taylor's comment?
No, what did Taylor say? Taylor said, did you figure out how to take a pay using credit card in that net payoff screen? No, Taylor, I have not figured out how to take a payment using a credit card in that payoff screen, other than the way you do it, which is post it through the virtual terminal and then post it. But I think Jim Reaves is listening in the conversation, either he or our buddy Earl up in, there's one of our other programmers up there. They may be looking at that. So, but that's a great question, Taylor.
Bob, were you going to touch on perhaps collections and flagging an account?
Yeah, I can do that a little bit, Kevin. And feel free to chime on in here. So give me a scenario. So Kevin Scott wants to slide his payment back or defer a payment, or?
Well, perhaps I need to bring you my new insurance when I come in and make my payment on Friday. And you don't want to forget to get my insurance, so you can make a collection note and flag it. So whoever's taking the payment does not forget to ask me for my updated insurance.
Yeah, excellent. So what we can do is we can click on the collection here. So when the customer comes in, I can add a new note, and whatever I might want it to be, remember to get when he comes in, and I can save that note. And I can also go in here and well, I can do let's see, I can add a flag account and flag it because of that. And it will then flag that account, and I can block it from taking payments. The only reason I would block it would be if I didn't want to take a payment from, because maybe he's out for repo or something like that. So just know that you can flag accounts and put in a response to things that you're doing. So if you and then let's say I phoned his work and there was no answer, I can put that in there, and I phoned his residence and left a message. I can do that. So, and then I can save those. So I can put those notes in there for him. Now, when I exit out of here and I come back into Kevin's screen later on, so I come back in, different employee comes in, wants to take a payment on Kevin Scott. We continue with the payment. And there's a flagged account right here, so new insurance is due. And here's the notes that are on the account. I can look down to what the flagged notes are. Does that help, Kevin?
Yeah, thank you, sir. It just invariably used to be the customer would come in, make a payment, then leave, and then whoever was working the front desk would think after the customer left, oh, I forgot to get his insurance. So it's just a nice reminder.
Yeah, or they come in and make a payment to say, hey, I'm going to bring you insurance next week, and you make a note in the system because you forget as well. So yeah, it's good to make those notes in there if you can.
We have another question, Bob.
I've been using the side note to track an additional insurance product. Would there be an advantage to use managed fees instead? Yeah, Lloyd, there would be. So what happens is if you're using the side note, which is fine, the problem is that kind of takes away from what the side note was initially used for maybe doing a repair to the customer's car and having them make a payment on the side. So the managed fees is just a little cleaner, and then it allows you to then use that side note in case you need to use it for what it was originally designed for in the beginning. So that's really the only advantage. But as long as you're happy doing what you're doing, you can certainly do that. Hopefully that makes sense to you. Let's see what else we got going on. So we got the customer. We've taken some payments. Maybe he didn't bring his insurance. Maybe we bought some insurance and tagged it onto the car, and he hasn't made those payments. And so the next thing you know, poor old Kevin, we've got to go ahead and repossess him. Now, remember, I'm kind of talking about what we do in the normal scheme of things without these special circumstances going on. And depending on the state you're in, I don't remember seeing South Carolina pop up as one of the states early on. Let me go back and look. Kansas is in there, though. I didn't see Missouri, but I did see Kansas. Kansas is a right to cure state. I can't remember about Indiana. Quite a few folks in Indiana, but anyway, most of the other states I see there: Georgia, Alabama, Florida, North Carolina, all those states, Tennessee, they're all what we call self-help repossession states. If the customer's in default and the contract says if they're in default on their contract, then you can basically repossess the vehicle and accelerate the contract. What you're doing in that case is you're making the decision to go ahead and repossess the car. Now, if you're in the great state of Kansas or great state of South Carolina or Missouri or any other state where there's a right to cure, generally speaking, what happens is the Uniform Commercial Code will basically state, hey, before you can repossess a vehicle, you've got to give the customer the ability to bring their account up to date as if it was never late and continue as normal. So, you know, and it's probably a reasonable thing to do in most cases. But you know, you necessarily don't want to, you certainly want to give the customer the time frame or the ability to make a payment to you, but having established the fact that they're not going to make a payment for whatever reason, then is the time to maybe think about, you know, making the decision that you've got to go repossess the car. And I see Antonio there. Let's see if I'm going to answer his question here shortly. I'm in Georgia. I have a question in regard to repos. Recently, we went to repo and had an issue where we needed to call the police. They informed us we were actually trespassing, so I'm going to be charged with that. Yep. However, we specifically asked GIDA. We were told we could get our property back as long as we had a repo form and contract with us. Any info on that? Yeah, well, they were wrong. In my humble but accurate opinion, you know, and this is where you should use your attorney to give you advice, not the likes of me or the GIDA or anybody else who's not an attorney who's going to represent you in court when you do something that was not correct. Here's something I learned from a police officer a long time ago, and whether it's accurate or not, I don't know. But he said this. He said, if the police are ever called, there's deemed to have been a breach of the peace, and you are only entitled to a peaceful repossession. Therefore, if the police show up, the repossession is now no longer peaceful. Therefore, you cannot get your car. Period. So if and it doesn't matter who calls the police. If the police are called, you can't get the car. Now, that being said, that's why most repo companies, I believe, sneak out in the middle of the night under the cover of darkness, or they wait till the customer's in the Walmart parking lot, and they know that even though they're only going in there for, I think as Squeaky says, they're only going in there for a gallon of milk, it's still going to take them 45 minutes to get in there and back out. And so you've got a little bit of time to get the thing on a rollback and haul it off, or jump in it with a key if you happen to have an ability to have a spare key from somewhere to go get that vehicle. So what happens is this: the idea that once you've decided to go get the vehicle, you're only entitled to a peaceful repossession. So as long as there's not a breach of the peace, generally speaking, you can get the vehicle back. And when you get the vehicle back under your control and get it back to your lot, then now it's essentially your vehicle. It's been repossessed. So you now have control of the vehicle. The customer can't come along and call the police because now you've got it back at your office or something like that. So generally speaking, you've got to be careful with the advice you get and where you get it from. And as well, you've got to be careful with the circumstances. Not everybody knows every single question. In fact, most often when you ask an attorney a question, the answer is almost always going to be, it depends, because the circumstances are almost always going to be different in different situations. Now, so having made the decision to get the vehicle back and having been able to successfully get it back to our lot under our control, there's several things that we want to do. And again, these are my opinions. What I would want to do is I'd want to get all of the stuff that's in the vehicle, that's their personal belongings, and stick it in a bag. Every state will have their own rules about what you do with that bag of stuff. And it almost certainly involves sending the customer a certified notification or some kind of verifiable letter. I don't know in today's age if an email could be considered verifiable when they respond to it, or a text message that they got or something like that. But still, the old-fashioned way is send a certified letter, maybe drop a first-class letter in the mail as well, have somebody witness that you're doing that, and send them a notice saying, hey, we've got your belongings, you've got 30 days to come and get it. And I know in Georgia, for example, having done that one time, you've got to do it again. So now the customer's really got 60 days to come and get the belongings before you can dispose of them however you feel fit. Now, the states like South Carolina, Kansas, Missouri, the right to cure states, before you repossess the vehicle from the customer, generally speaking, you've got to wait a period of time before you can contact them. Then you send them a notice that reads something along the lines of, hey, you're late in making your payments. You've got so many days or till this date to make your payment and continue with the contract as though you were not late. And then we will, but we're only going to send this notice to you either no more times or one more time, depending on what the state statute allows. And so some states require 2 notices, others only require 1 notice. And at the end of that period of time, if the customer hasn't made your payment whole and brought you up to date, then you can go ahead and do the peaceful repossession. So once you've got the vehicle back, you've got a decision, you've got the stuff out of the vehicle, you put them in plastic bags, got them safe and secure, and you've got the vehicle, and you've got to make a decision then as to what you're going to do with the vehicle and what you're going to do with the customer's balance. And there's a couple of things that, I would send a mail, Squeaky says, I would send the mail return receipt requested, or whatever it's called, meaning the post office confirms it's delivered, but don't send signature required, or the customer won't sign for that. Well, that's a good point, Squeaky. If you're going to send a letter, and all these letters should go certified return receipt requested, so that they're going to get there and the post office let you know when they've been delivered. All that's good to do. And my good friend Miles Stevenson, I don't know if he's on board or not. He may not be. He would say drop it in the mail first class as well. because that way they'll get that one. They may not receive the one that requires a signature, you know, just in case it wasn't signed for. But anyway, get the mail to them. Now, the vehicle, having gotten the vehicle back, we come into the system and we go to the repossessions, and we're going to print a letter once we decide what letter to send, and the program will help us by jogging our memory a little bit. So I'm going to repossess Kevin's car, and we've got the date of the repossession, and any fee that we have for repossessing the vehicle or storing it or getting it ready for sale, we can add back. Be careful. I sometimes see dealers say, Bob, I want to add a $500 repo fee. And I say, well, great. How much did it cost to repossess the car? Well, it didn't cost me anything. I just went down there and got it and brought it back. Well, you can't really just add numbers to what the customer owes you unless there's a legitimate reason, like you had to pay a $300 repo fee to the repo company who went and picked it up and brought it back to you. You write them a check for $300. You could put the $300 in here and charge that back to the account. You cannot charge attorney's fees unless you pay an attorney to do some work for you. So then we say, is the repossession voluntary or not? That's because some states, like the great state of Tennessee, I think if it's a voluntary repossession, they get a different refund of credit than if it's a forced repossession where it's not voluntary. So we're going to say it's not voluntary. We went and picked it up anyway, and I do have possession of the vehicle, and I'm going to be putting it back in inventory. And the program wants to know what the actual cash value of the vehicle is. Now, this is a great question that causes a lot of confusion from time to time. The actual cash value of the vehicle is what you would pay for the vehicle in its current condition when you get it and put it back on your lot. What would you pay for that if you bought it like that at the auction today? So maybe I'll pay $2,000 for the vehicle. Now, that's not what the customer owes, doesn't come off the customer's balance or anything like that. That's just the ACV, because the IRS want to know what's the ACV of the vehicle for repossession purposes, because what you write off to them is different from what you're going to be billing the customer later on or applying to the customer's account later on. That's going to be determined by the future sales price. Now, so what do I want to sell it for when I get it back in inventory? What's the new title number? This is a question I often get as well. When you sold the car had a title that you had in your possession when you sold it, and you transferred that title into the customer's name, recorded yourself as a lien holder, security interest holder. What the title number that we're referring to now is the new title that has your customer's name on the front of it. Has your customer's name on the front and your lien on the bottom, and it's probably held in most cases in the electronic vault in the sky, the ELT system. So you have to log in to get the ELT system to get what the title number is, and that's the number that you would type in there. That's the new title number. And then what is the mileage on the vehicle now? It's got 112,000 miles. And what do we want to get down? We want to get 1,000 down. There's no tag on the car. It's going to go into lot number 2. When I repo my vehicles, they're going to automatically go into lot number 2. I can divide my inventory into different lot numbers, just like I can divide my customers into different filing cabinet drawers. My inventory is divided into active inventory, sold inventory, repoed inventory. Maybe I've divided my active inventory into boats, motorhomes, motorcycles, trailers, and cars, and trucks, or whatever it happens to be. The state it's titled in, there's no decal that I'm worried about right now. And this shows the age of our program, really, because in the old days, tags used to stay with the cars. So that's where you'd put the tag number. But in some cases, we might put the tag number in there so that I know what it was, just for my reference, because that tag still belongs to the customer. I would give that back to them with their personal belongings ultimately. But the tag, at least I know what the tag number was for my records. It's got actual mileage, and I can put in here, do not sell until, and the date will be put in here by the letter that you print. So what I can do is I can come here to print my repossession letter now, and it's telling me it should be sent using certified mail, into the certified letter number, into so it's already here. So I can put in the registration code of the number of the letter, and the date of the repossession is the same. And up here, I'm going to choose which letter. Oops, I should have read those first before I clicked the button. There was 3 choices. Let me go back. The 3 choices are the 10-day letter, a 20 or 30-day letter, or a release form. Well, by far the easiest thing is if the customer says, hey, you know, I've run into hard times. This COVID-19 is a nightmare. I don't have any more money. I'm not going to have any for a long time. Can you take the car back? And you look at the vehicle, and he was good enough to wash it and detail it before he brought it back. It's in great shape. You say, yep, just sign here. You're going to do the repo release form. That way, he's giving you the vehicle back. There's no rebate going back to him. There's no money going back to him when you sell the car for more than he owes. There's no money owed to you by him because you sold it for less than he owes. It's just, hey, I'm taking the vehicle back and full satisfaction of the debt. And that's a release form that you can get signed. Now, the other 2 letters are appropriate in certain circumstances. The 10-day letter, we call it a 10-day letter, and it's really the wrong name for that. The correct name is the notice of disposition. It's the notice that we're going to dispose of the vehicle, and the amount of money that we get, we're going to apply to what he owes us. Now, whatever he owes us, in this case, it was like he owed us like $7,000 or something like that. So whatever we get, we apply to what he owes, and he still owes us the difference. Now, that's the 10-day letter. The 10-day letter will be sent, and you'll state that you're going to sell the vehicle at either a public or a private sale. Now, if you're going to sell it at a private sale, which would be off your lot to an individual or to another dealer, the customer can object to that. And he can say, no, I want a public sale. And a public sale might be more difficult to get to these days because some of the public auctions are not maybe holding public auctions anymore. So it may be of interest to you that I think a good number of years ago, the Uniform Commercial Code was amended, and somewhere in there was an amendment that basically said that a public sale could be an electronic sale online, and I think they even used the company name eBay Motors. So it may be that if you were going to do that and you were going to have a sale date on there, the sale date would be the final date of the sale, so that the customer could come on there and run the price of the car up maybe, and ultimately would either sell or not sell. But the idea that we have to be maybe more careful how we do sales these days, if we're forced into a public sale, maybe the only choice will be something online, and eBay may be the answer. Who knows? But there's other companies out there that are private companies that you can use. Obviously, if you were taking it to a dealer-only sale through Mannheim or ADESA, those are certainly considered private sales, not public, because they're not open to the public where the customer can come. If the customer can go there and bid, it's public. If he cannot, essentially it's private. So that's the way that I would look at that. But now, so the 10-day letter is always appropriate. If you're going to sue or planning on suing the customer for the deficiency that he owes, and I know some dealers from time to time want to do that because, you know, they're disgusted with the condition of the vehicle that was beaten by a baseball bat and set on fire, and, you know, the customer still owed me a lot of money, and, you know, I want to sue him. Well, you can only sue the customer for the deficiency balance if you send that 10-day letter within a timely fashion. And that timely fashion is typically within 10 days. Your state statute may be a little different, your own state Uniform Commercial Code, but generally speaking, 10 days, if you don't send a letter to the customer within 10 days of the repossession, you can't sue for deficiency balance regardless. So that becomes, you know, a moot point. And a lot of dealers say, well, I don't care because I'm not going to sue for deficiency balance anyway. I always recommend to send a letter early. Why? Well, because the earlier you send it, the sooner the sale can happen. The sooner the sale happens, the sooner that you've washed your hands of the vehicle. The later you wait to sell the vehicle in a commercially reasonable manner says within 90 days. So you should be selling the vehicle at a private or public sale within 90 days of the end of the 10-day period at least. It should be sold within that period. Otherwise, it may be deemed not commercially reasonable, and now you've got another problem. So you want to sell the vehicle. if you don't sell it in a timely fashion, there's always a chance that the customer maybe files bankruptcy. And if the customer files bankruptcy, on occasion, dealers have been made to give the vehicles back because it was still in their possession, even though the 10-day period had long since passed, and but the dealer still owned the vehicle and hadn't taken it to a sale yet because he hadn't teed that up. So it's worth considering repossessions, where you're going to sell your vehicles in the event that you do have to repossess. Now, the 20-day letter, and we call it the 20 or 30-day letter because some states, the great state of Florida, gives the customer 30 days to respond to a 20-day letter. And again, a 20-day letter is really the wrong name for it because really what we call the notice of intent to retain the collateral in full satisfaction of the debt. I'll say that again. So you've got a vehicle back and it's quite a nice car and you just want to keep it in satisfaction of the debt. The customer owes you nothing and you think you can sell it maybe for more than the customer owes, and you offer to keep the vehicle and tell them, hey, we won't pursue you for deficiency. We don't owe you anything. We're just taking the car back in full satisfaction of the debt. You can send that to the customer as long as he's not paid more than 60% of the cash price of the vehicle. So in other words, if he's paid, more than 60% of the cash price of the vehicle, he's close to the end of the contract. That becomes not an option. So the option is only if he's early in the contract and you want to keep the vehicle in full satisfaction of the debt. You can do that by sending the notice of intent to retain the collateral in full satisfaction of the debt. And it basically says, we're going to keep your car. We're not going to give you any money if we sell it for more than you owe. You don't owe us any money. We sell it less than you owe. We're going to keep the car in full satisfaction of the debt. And you've got 20 days to object. If you don't object, it's our car. So at the end of 20 days, it's your car. Now, unless, of course, he files bankruptcy. So at the end of 20 days, you probably still want to do something with that vehicle. But that option is certainly there. If he objects, then you're back to the notice of sale, the notice of disposition, which is the 10-day notice. Hopefully that kind of gives you an idea. There's in those big yellow boxes there on the screen, there's a standard 10-day and then the 20/30-day letters. We just call them 20/30 because most states you have, the customer has 20 days to respond. Florida, where they've got 30 days down there to respond. And maybe that's the case in some other states as well. Every state has a slightly different uniform commercial code, a little more fast after the federal uniform commercial code, but they all kind of modify it or seem to modify it just a little bit. So look at your own state's uniform commercial code to determine the obligations of both you and your customer during a repossession of secured collateral. Any questions on any of that? How are we doing, Gianna? Are you still awake out there?
You got one question in the chat, Bob.
Oh, one question in the chat. Can you resell the vehicle on your own lot? Oh, yeah, you can. That would be what we would call a private sale if you're selling it off your lot, unless you were to go through the notification of the local newspaper and putting it in there and saying at what time you're going to have this public sale, much like the foreclosure sales that you see in the newspapers. So you can advertise it as a public auction off your and hold a public auction off your lot, or get a public auction company to come and do that for you on your lot on a specific date, and that way notify the customer when it's going to be. Then it would be a public sale. But otherwise, generally speaking, when somebody asks you that question, they're just thinking about, hey, I want to repo the car and I'm going to sell it to the next customer that walks in. Just remember, if you've sent a 10-day notice and you sell it for $7,000 and the customer only owes you $2,000, you're going to write them a check for $5,400, even if you only got $1,000 down. So that could be a bit of a deal stopper, that you might not want to sell it right off your lot if you're going to sell it for a lot of money and have to owe a lot of that money to the customer. Theoretically, though, that money belongs to the customer, because if he had the time to sell it himself, he theoretically could have sold it for that price. Nick, is there a way to send a mass email to all of your customers? Yeah, there is a way to send a mass email to all your customers. I'm going to jump out of this repo screen right here. And Nick, under the work collections, I'm not sure if you're familiar with this. We're using down here, it says use the new collectors work list and collection note screen, so I can set the parameters for the customers that I specifically want to look at. So between however many days late, and I can look at them for specific salespeople. I can include side notes. Then I can look at specific account types, and I can include customers without a collection note within the last so many days. I can choose a default action, so maybe a warning letter, and then I can view them in a list. And what I can do here is I can choose basically from these. Now, I'm not sure if this will send all an email. I think you asked for an email rather than a specific. I think you can email all letters here. So on the left-hand side at the top, email all letters, and what it will do is it will create a little box like this, subject from, you know, whatever I want it to call it, and then who I'm going to send it to, and then past due warning letters, and it will allow me to send those to each person on the list. Then it opens up the next one. That one, Bob at Reaves. I close. Opens up the next one. You can't see open up on my other screen. So that one is going again, customer name bill still. So it allows me to go through, and I can click send on each one. It will let me as they go. And complete. So it sent the ones with emails. So I don't know if that question, but you can always call in and ask that, and we can help you set it up. Oop, my internet connection is unstable again. Good question, though, Nick. My mass email, now that's a collection letter. So if you want to send a mass email to all of your customers, so that would be like from a CRM, perhaps, something along that line. So that was just past due customers. So my prospect manager, if I want to do my prospect manager, what I can do is I can have all my past sales in here. So all of my past sales I can show. I can show pending sales, past leases, deleted sales. So I can create in my prospect manager all of my sales, and from here I communicate with those as well. So I can communicate through. If I've got my email set up, it let me select multiple people to communicate with, either via text or via emails. So the answer is yes, you should be able to. Kevin, any thoughts on that?
No, I think you got it from that prospect. If you were to select all of those, then you can send text and emails from there.
Good question. Any other questions? We're rapidly approaching the 2-hour mark, and I'm still surprised I haven't scared everybody off yet. I've still got about 40 attendees on the list. I know at one point we were up to looked like 53 or something like that. So,
Bob, did you mention explanation of deficiency? I had a phone call, but you may have mentioned.
Oh, great. No, I didn't. And I'm glad you said that, because I know there's a couple of things. So once you've reaped the vehicle and you've gone through the process of deciding how you're going to dispose of it and sell it, then what we do is we can enter the reaped vehicle. So I can find the vehicle that I didn't save Kevin's repo though. I exited without saving. So let's go ahead and I'll repo your car, Kevin.
Back on my feet.
Say that again.
Said I'm back on my feet, I guess.
Back on your feet. Well, we'll go ahead and I'm going to save that repossession. I got the vehicle. Add it back. Got the $2,000. And let's just put in a price. I will put that in there. And let's go ahead. And what I'll do is I'll actually go ahead and I'll tell it that I've printed the 10-day letter. and we'll do it for a public sale, and we'll sell it on, what day is today? 0408. See if it'll let me sell it today. I don't know if it will or not. Place here. Place and print a letter. So we could say eBay. If you're going to do it through eBay, you would want to make sure that you had the actual address of that vehicle on the website so you could find it. Now, what it's trying to do is trying to print the repossession letter to my screen there. You can probably see that. And that will save. And then what I'm going to do is I'm going to save that repossession. So now the car's back in inventory. They want to edit it, not right now, but it would let me go back in there and edit that inventory. And so the next thing I'm going to do now is, it's been a week or two or three. I've got the car. I went ahead and I've sold it. And I'm going to find Kevin Scott on here now. Recorded sales price of the vehicle to get $4,000 for it. Any additional fees? What was the date and time of sale? Place of sale. Who was the buyer? And then I can plug in whoever bought the vehicle and sold. And then we're going to go ahead and save it. Now you'll notice what it has up here. It has the adjustments. So I've got the vehicle sold. So now what happens is we have the explanation of efficiency. Now, of course, if you're going to send an explanation of deficiency before the sale of the vehicle, it's going to basically how much they still owe you to pay the vehicle off. And they have to request that from you. Now, after the sale, you've got the notice of sale. And so the program knows whether you've sold the vehicle or not sold the vehicle yet. And what it does is it has what the balance people was that will allow us to print the letter for the customer that basically says, hey, we sold it for $4,000. You owed us $74.46. You still owe us $34.46. The ACV is really irrelevant at this point, at least from the customer standpoint. It's relevant for the IRS because it wants to account for the repo and then the sale of the repo. We're accounting for the sale to the customer, which is different. So anyway, we can record or edit the sale of the repo, so I can go back in and make changes if I needed to make changes, and I can print the explanation for the after the sale, and that will get sent to the customer, letting them know that he still owes me $34.46 basically. Does that make sense? And let me see if those will pop up. So there's the explanation, or if you can see that. So it basically creates the form. The efficiency balance is $34.46 and how we calculated it. It tells you basically what you owed, how much we got for it, and how much you still owe. And that's basically it. Any questions? Let's see. Once you sold the vehicle, what is the best way to write off that account? Should we credit the amount left over, or should we post through the net payoff? No. So you wouldn't really do either, Taylor. You're not going to post a payoff. You're going to write off the balance. So once the customer either hasn't paid this $34.46, you're never going to get the $34.46. Then you're going to write that $34.46 off. That's at the time when what you will do is you would finalize the repossession. So we've got the repossession menu. You come down, finalize it, and we pull up Kevin. And basically he owes $34.46. And maybe he made a good effort and he came in and he had, all I've got is $2,500. Can I negotiate that? How's he paying? Cash, check, money order. Oh, lost my mouse. Where'd my mouse go? So you're gonna pay me in cash. And then what's going to do, we can the adjustment to zero the account out, we can put that in there, or the apportionment that we can write off. So what we can do is we can write the account down to zero if that's what we want to do, and that's probably what we're going to do, so that the account will be the remainder will be written off. Does that make sense? And then we would post the payoff. Are you sure? It's going to post $2,500 as amount received from the customer, and we'll post a write-off of $946 to close out the account. Yep. So that's where it's going to, what it's going to do. And so now when I want to go look up that account from Kevin, I can go down and I'm going to look for Kevin Scott, and he's really gone from this list because I've gotten rid of my repoed accounts, but I can click on show all accounts here, and then the repos will show back up. So there's Kevin's account there, and it's now showing it's paid out. So it's done. So it's been classified as a write-off now. Hopefully that would show you at least what we believe to be the correct way to handle it. If you posted a zero balance instead of the 946 at the end, it would leave 946 as a remaining balance on the account though. Four o'clock. Oh, Florida dealers, Kevin says sales tax credit on repossessions. Oh, that's fantastic. So there are some states where if you repossess the vehicle and you get a sales tax credit for the portion that you haven't already paid, then in the great state of Florida, let me just change my state here to Florida. So now I'm in Florida, and I go to my reports, and I go to, let's see, sales tax reports, I think, for Florida. I think it's going to print my sales tax credit. Oh, maybe under here. Sales tax.
You were there. Sales tax credit.
Hold on. Reports.
Number 2.
Sales tax credit. Here you go. I'm sorry. Sales tax credit report. So what it would do is it would run a sales tax credit. Now, I don't know if I have any in here, so let me go back a couple of years and see if there's any in here to view the report. You can go back 12 months, Kevin, on a sales tax credit, I think. Is that correct?
That is correct. You got to claim it within 12 months, or you donate that money to the great state of Florida.
Excellent. So what it does is it puts the formula in here that's required for the sales tax credit filing, so that will give you the numbers you need to put on their form. So that's free money that you get back because you've already paid that money to the state. The customer's car is repossessed, and whilst it's not a 100% full sales tax credit, it's way better than letting that money go back to the state, especially if it's an early repo. You get most of it back. So that's a good point. I forget about that.